Traders who are eager to try a new system or a new strategy in live market data can sometimes make the mistake of relying totally and solely on your backtesting data. Yes, backtesting does give us some very valuable results, but sometimes it's not the complete evaluation process that can give you the results that you can rely on when you are trading those live market data. Backtesting refers to us going back to a specified period to test how our system would perform in those market conditions. Because yes guys, as much as we are backtesting, the same conditions that affected the market last year are not the same conditions that will move the market this year. Now guys, don't tell anyone, but I'm definitely going to give you guys a free backtesting and trading journal template. You guys will see it in the description. But otherwise, keep watching so that you guys can see exactly how to use this template. What backtesting then does is that it allows traders to test their system without actually having risk on the table. So you can still test how effective your system is and how profitable your system is, what's the win rate of your system, without actually having to add risk on the table. As long as an idea can be quantified or a trading system can be quantified, that system can be backtested. As long as you can put any information into the form of numbers, guys, you can backtest your system. So some traders obviously love to backtest their system on platforms, and there are countless platforms, guys, that allow you the opportunity to be able to backtest. For example, one simple platform that we use here at the Forex Chasers is TradingView. Now, yes, indeed, you do need to purchase the TradingView Pro for $15 a month to be able to backtest those lower time frames, but it's definitely a good investment for you as a trader if you want to get an accurate representation of how your system performs, but with the added ability or with the added we leave that out, but anyway, with the added whatever it is of not having to add risk on the table. So you're still testing, you're still seeing how your system performs, but there is no risk involved. An example of nice backtesting would be someone, for example, like me, that trades these chart patterns. So I would want to see how often do these chart patterns actually play out? Do they give me winning trades? So what I am going to do as a trader is I'm going to go back in time, select a specific period, and I will then begin to test. Every time I see a double top structure or every time I see a double bottom structure, I'm going to be executing on that trade, taking into account a few pieces of information to be able to do what? To be able to optimize my trading system. Now we're going to talk about some optimization. Nice big English words right there, guys. But nonetheless, simply what optimization is you taking a system and modifying certain things of that system to be able to make you money. Do you know that, and this is not a Chappies commercial, but do you know that you can take an unprofitable system, a system that is consistently losing money, but with the process of backtesting, you can observe certain elements within the system that you can optimize. Maybe this system is actually a profitable system, but it does not, or rather it is not able to generate profits because maybe the current system executes too early. And so what you can do as a trader is observe those results and then optimize this system to be able to allow this system to generate you money. Now, backtesting and optimization provide so many different benefits for a trader, but even still, guys, it's only part of the process. There is something called in-sample testing and out-of-sample testing, and that's what we're going to talk about today. Now, before you guys start your process of backtesting, what you guys can do is set a specific time period that you are going to backtest. Now, what in-sample backtesting is you testing a specific period of time with your system. So you're going to be testing your system in this specified period of time, and what you are seeing is obviously the results of your system. How does your system perform? Now, what we will consider this to be is in-sampling testing. Now, what out of sampling testing is exactly the same thing, but in a different time period. So you can think about your process of backtesting having both in-sample testing and as well out-of-sample testing. And what these two different parts of testing do is they complete your whole backtesting process. Now, your in-sample testing, guys, you can consider that to be backtesting results that you have conducted before optimizations have been made. So before you start optimizing and changing certain elements of your trading system during the process of backtesting, you want to know how the current system works. So that is your in-sample testing. Now, your out-of-sample testing is your backtest results after you've made certain optimizations in your trading system. Now we're gonna add something on top of all of this. And what we're going to add is the idea of correlation. Now, I'm sure you guys have heard correlation a countless number of times, and how we're going to use this concept, guys, is for the purpose of backtesting. Now, what we mean by correlation is that you want to find correlation between your backtest results and your forward test results. Now we are going to tell you guys the difference between backtesting and forward testing. Backtesting is basically you testing your data without the risk involved. Backtesting is you checking previous market data. Forward testing is you testing your current system in live market data. Now, forward testing can include both demo trading and live trading. So whether there is no risk involved or whether there is risk involved, when you are trading your system during live market conditions, that will be considered to be forward testing. Now that we've spoken about backtesting and forward testing, let's combine them with correlation. For correlation, what we're going to do is we need to find correlation between our backtest results and our forward test results. Why? Because that will tell us how effective our system is. We know, as traders, we know that sometimes backtesting results does not and is never a 100% accurate representation of what your forward test results would be. Your backtest does not tell you how you will perform in live market conditions. Now, what we're going to do to help us have a better expectation of our results is, first of all, guys, you guys are going to start off by backtesting. Once you have backtested and you guys understand the statistics of your system, you will then forward test to see how do you perform, how do you execute your system in live market conditions. Once you know how you execute your position in live market conditions, then you begin to look for the correlation. What are you trying to correlate? You are trying to correlate the results from your backtest versus the results from your forward test. So you are trying to see, are the two results similar? Is there a general similar result from both your backtesting results and your forward testing results? So you are looking for that correlation, and that correlation is going to tell you how profitable your system is. What are the statistics that you can expect with this current system that you guys are trading? Now, guys, we're gonna get into our backtesting journal or our backtesting spreadsheet, and as well as our live forward testing spreadsheet, which you guys could just call a trading journal. For that, I'm gonna take you guys into the charts with me. I'm gonna show you, or not rather into the charts, but I'm gonna take you guys onto my template so that you guys can see exactly what's involved in both my backtesting template and as well as my forward testing template. So stay tuned, guys. Let's get into it. So guys, here is the template that you guys will be receiving in the description below. So don't leave this video without grabbing yourself the template. So going into things, guys, I have for you guys a quick journal and a backtesting spreadsheet. So we're gonna go into the backtesting spreadsheet first because that is the point of today. And then obviously the journal is or looks sort of similar to the backtesting spreadsheet. So going into our backtesting spreadsheet, you obviously will have a number of trades that you guys are taking. So trade number one, obviously you then need to put in your position.
So what are you doing? Are you buying or are you selling? So obviously you'll select buy or sell. Your entry type. So I've refined this, and this backtesting spreadsheet is relevant to the information that I need when I'm obviously going to optimize and do different things in my trading strategy. So I also pay attention to my entry types. What kind of an entry am I taking? Am I taking a risk entry or a reduced entry? You obviously then type that in. What is your stop loss size? You'll obviously put that in over there. And then obviously what is your target size? You'll obviously add that on over there. Big, nice target, obviously nice risk reward ratio. And then which time are you opening this trade? So for me, obviously you go to the date that you've opened the trade. And then obviously if you want the time included, then you will set the time. So if you guys are also trading, like for example, those sessions and those whatevers, then you guys will obviously include the time, whether you took that trade at maybe, I don't know, 1 a.m. or whatever the case is, let's just say 2 a.m. Yeah, that's cool. So once you guys obviously have the time there, you'll see which session. And the reason why we're looking at times is because I also take into account the session that I'm opening this trade during. So now that you obviously hear by the sessions, you pick which session you've opened your trade, whether it was London, and then obviously the result of your trade. Was it a profit? Was it a loss? If it was a profit, what was your P&L? Did you make 5% on this trade? Did you make minus whatever? I don't know, minus 2% if that was your risk or whatever the case is. And then obviously, what are your confluences on this trade? For me, I also look at confluences. So I want, for example, I want a continuation pattern. I also want maybe a reversal pattern, and I also want candlestick confirmation. So I'll put in obviously there all of my confirmations that were involved in finding this entry. After that, guys, you add your screenshot of this trade. So whatever you obviously, I use TradingView, so I'll go to TradingView, I'll take a screenshot of my position and then just paste the link of my screenshot here. Then obviously your notes, whatever you have to say about this position, that's what you're going to add there. And this is the only information that is relevant for me in my process of backtesting. Now, the reason why I'm giving you guys this as a template is because I want you guys to modify this and add the relevant data that you need in your backtesting. If, for example, you also take into account trade management, then add trade management there. How often do you manage your trade? Or if you're looking at those types of things, you're going to just obviously add, go to the end of this template, then you're going to use this plus sign over here. And obviously you're just going to add that extra column that has that extra data that you need to take into account. Now, guys, that we've spoken about the backtesting spreadsheet, we're going to go on to our quick journal, and I use this as a daily journal as well. So looking at the trade that I'm going to take, obviously I'll pick the pair. The pairs are relevant to the pairs that I trade only. So you guys will see only the pairs that I trade here. So maybe I'm buying Aussie CAD today. Obviously my position is going to be a buy. My entry type, I took a risk entry on this pair today. So I'm just going to type in the trade that I took. My stop loss is 22 pips. My target size is 98 pips. And then obviously the date that you're opening the session, which session did I open this trade in? I opened this trade in the London session. So you guys will see P&L, I don't have it yet. Screenshot, I have not taken one as yet. And then obviously the notes that I have on this trade. And then I guess any additional confluences that I had. I did have a continuation pattern. Well, it was a reversal pattern because I'm trading a lot of structure head and shoulders. And I also do have my candlestick confirmation. Yes, I do have a structure on my 15-minute, but that's not my entry time frame, so I won't take that into account. So this is just a quick view of how I would fill out this quick journal. Guys, go ahead, download the template. Don't leave it, it's in the description.
Now the bottom line, guys, is that backtesting is a tool, a very effective tool that if used properly can refine and make your job as a trader so much more easier. Now, think about backtesting, have your in-sample testing, have your out-of-sample testing, and then obviously correlate those results with your forward testing results, and you guys will have so much more of a rounded holistic view and a better expectation of how your system will perform in live market data. This is Tramayne, your FX Chasers mentor. Thanks so much, guys, for watching until the end of this YouTube video. If you have enjoyed it, hit the like button. Let me know that you guys have received some value. Otherwise, if it's your first time on the channel, definitely don't leave without subscribing. Otherwise, this is Tramayne. I will see you guys in the future videos. Thanks so much, guys. Cheers.